I'm about to break down how to invest in the stock market in 2023 for beginners. A huge lesson that we learned last year is that the market can be volatile and that the least educated can get burned the worst. So, the first lesson, don't be uneducated and don't be discouraged just because 2022 was a bad year. There have always been down years throughout the history of the stock market, but the overall long-term direction is always up. The stock market, along with real estate, has been the two best places to invest money. When you look at what has performed in the past, the question is how. How do you go about investing as a complete beginner? Where do you start? What tactics can you implement? And what stocks should you choose? These are the types of questions we're going to answer. So, why is it important to invest in stocks? Well, first you need to understand what a stock is. A stock is a business. So when a business wants to raise money, they sell their business to the public on the stock market. This business gets divided into thousands or sometimes millions of equal portions. Each one of these portions is what's known as a share of the stock of the business. So, when you own one stock of, let's say, Apple, you actually directly own one small portion of Apple, the business. You are now a business owner. Now, I've got a question for you all. What is the purpose of a business? Is it to serve their customers? Yes. To make a useful product? Yes. To make a positive difference in the world? Yes. But let's be honest here. The true purpose of a business is to make money. That's a fact. The great thing about this fact is that when you buy the stock and become a business owner, that business is now designed to make you money because you own it. And that is the reason to get into investing, because you can buy stocks of businesses throughout the world, which have the sole goal of making you money. Investing in stocks can provide you with a source of passive income, which means you don't have to work 9 to 5 to earn it. You don't have to put on a suit and tie or labor away to make money. Instead, you can simply sit, drink coffee, watch football, or engage in your hobbies while the investments you've made work for you. This is what Warren Buffett refers to as passive income as opposed to active income. It's important to have passive income as it allows you to make money while you sleep rather than working until you die. Now, let's move on to the key steps to get started with investing in stocks. Firstly, it's important to note that you don't have to be a millionaire to start investing in stocks. Investing is available to everyday people, as you can buy stock in companies like Disney for $90, Coca-Cola for $60, and Apple for $140. The stock market is affordable for everyone. The first step to buying a stock is to sign up to a brokerage company. This is a platform that allows you to buy and sell stocks. There are various brokerage companies available, such as Robinhood and Webull, which are popular for those who are just beginning their investing journey, as they allow you to buy and sell stocks for free. I'd highly recommend Webull. This is an awesome platform that helps you invest in a bunch of different things like stocks and crypto in a really simple way without having to pay high rates as you would have to with other platforms. And you can actually get 12 free fractional shares if you sign up for a Webull brokerage account now using the link that I've put for you in the description box below. If you've got any questions, just join our free and friendly Discord community, which I've also linked below. Once you've signed up for a stockbroker, you are now capable of buying and selling stocks and forming a portfolio. However, now you need a strategy. Just like playing a game of football or chess, it's important to have a strategy when buying stocks in the stock market. So, you need to choose how you're going to play the investing game. There are different types of investing strategies that you can engage in. Let me start off with my favorite type of investing, value investing. The fundamental idea of value investing is to buy stocks that are undervalued, where the value of the stock is greater than the price you pay. For example, when you go shopping, you like to find clothes or a phone or items that are on sale, right? Value investing is like shopping for deals, but instead of shopping for a new laptop or phone, you shop for stocks. There are essentially 4 keys to value investing. First, look to understand the business that you invest in. You wouldn't buy a business in your local town before you fully understood the business. The same idea goes with a stock. So, stick to businesses that you are capable of understanding. This is different for each investor. Some investors will understand gaming stocks more than others because they game themselves. Every person has a different set of expertise and group of stocks that they can understand. Secondly, a great value investor looks for businesses that are not easy to replicate. They have things about the business that helps them beat their competitors. Whether it's Coca-Cola's advantage in that everyone knows Coke and loves it around the world, or Canadian National Railway's advantage in their infrastructure setup and railway lines. For example, another railway line would struggle to compete because they would have to build a whole new railway across Canada just to start competing. Third, a value investor wants management with integrity and talent. Managers are the ones running your business and controlling the day-to-day environment. If your manager is rotten, this will leak through to the employees and the business itself. Lastly, value investors pay a price that makes sense, one where the long-term value of the stock is better than its price. You wouldn't pay $100,000 for an iPhone even though it's a good product, but you may pay $1,000 and you would love to pay $100. The same goes with a stock. You wouldn't pay a ridiculous price for a quality stock, but you would pay a fair price or a cheap price. Dividend investing is another way you can play the investing game. If you're a fan of consistent income and you don't want to wait for a stock's price to go up, but you just want consistent cash flow, then consider this strategy. Essentially, when a business stock makes money, they have two key options on what to do with it. One is they can reinvest that money back into the business and look to grow it. The second option is to pay out those earnings to the owners of the stock. This is called a dividend. Normally, dividends are paid out quarterly, but you can also find ones that are paid out monthly. A big thing to watch out for with dividends is consistency. Some stocks will always pay their dividends, while some stocks are inconsistent. One way you can mitigate a potential dividend cut is by buying what's called dividend aristocrats or dividend kings. Dividend aristocrats are stocks that have consistently increased their dividends each year for 25 years or more, such as IBM, Exxon, Chevron, and General Dynamics. Dividend kings are stocks that have consistently increased their dividends each year for 50 years or more, and these include Coca-Cola, Colgate, J&J, PNC, and a range of other quite mature companies. These stocks, as history shows, are very unlikely to cut their dividends in a recession or in tough times. They haven't done so for 50 years now. If you're lazy, not even just lazy, but if you just don't have the time to go about researching stocks, then you may want to consider passive investing. A lot of beginners think passive investing will not get you good returns, but this is untrue. Passive investing is when you buy large groups of stocks such as index funds or ETFs, instead of actively picking out individual stocks. For example, you can buy the S&P 500, which is 500 very large USA companies, or you can buy technology index funds if you think that sector will do well. ETFs and index funds are a good way to diversify your portfolio and spread your risk. The worst thing you can do is get overwhelmed by all of the information and just give up on making your first investments. If you are overly meticulous, you'll end up waiting forever. Inflation will eat away at your savings and you'll stay poor. Even if it means slowly starting with passive investing in index funds, dip your feet in with a little bit of money so that you can start learning the game. It's a bit like a fun game. It's fun to make money, but start small and play the game wisely. So, that should give you a good overall idea of how to get things started in the market, some strategies, and some simple guidelines to follow. Investing is important. If you don't learn it, you're going to find it very hard to get or maintain wealth. And if you don't have wealth, then you have less freedom to do what you want in this world. I love the game of investing. I don't know if you guys do, but I hope that you'll learn it more and end up loving it like I do. And I hope it makes you a lot of money. And that wraps up today's video. If you learned something new today, be sure to hit the thumbs up button down below and comment any thoughts or questions that you might have. We love hearing from you guys. Also, be sure to subscribe to the channel with notifications turned on so that you can be alerted every time we upload a brand new money-making method that you simply do not want to miss out on. See you in the next video.